Bit of a mixed bag. It's been this nice, steady risk on. Both the traders and retail have just been loving life. A little more mixed. Something has spooked the trading crowd a little bit. But first, let's go to the risk on type flows. This is good. This international developed, U.S. equities, there's tech. But look, that 7 to 10-year treasury, that would be a little risk off. I also find GSLC is interesting. That's a multi-factor ETF now, $8 billion. That's a good win for Goldman right there. Little value in treasuries, right? So a little risk off here. Let's look at the outflows, and that's where this really, I think this story gets more compelling. Look at the outflows. You've got junk bonds, SPY, small caps, and emerging markets. This is a who's who of risk-on ETFs for the trading crowd. So something has spooked them, although it looks to be a little short-lived based on the volume. Let's look at the traders versus the allocators chart that I love to show. These two types of investors have been on the same page for weeks, right? But look, the traders are a little bit spooked. 2 weeks in a row of outflows. Allocators still doing what they do. But the trading crowd getting spooked is interesting. We'll see if this, portends anything bigger. But for now, obviously the slightest thing has them a little nervous.
Yeah, and that little thing that's got them nervous is the coronavirus. Now let's bring in Massa and Claire Ballentine of Bloomberg News. Annie covers the asset management industry, and Claire is a cross-asset reporter. Claire, let me start with you because the coronavirus scare triggered a risk-off shift across geographies and across asset classes. The effect on U.S. stocks, though, has been fairly short-lived. What are you seeing when it comes to some of the other risky assets out there?
Well, for ETFs, clearly investors are concerned about the coronavirus. We saw emerging markets funds being affected by that. We also saw HYG, one of the high yield ETFs, see its largest outflow on record in wake of the coronavirus. So it's something to definitely look out for.
And it's something that I'm sure people are talking about as well, Annie. All three of you just returned from an ETF conference in Florida. And one of the big themes from the event was how a 60-40 portfolio may no longer protect investors when the everything up rally falls apart and things start heading south. The question then becomes, where do you go for that protection?
That's exactly right. So at the conference, one thing that came out, and something that GMO's really been talking about for a while, is that in the next 7 years, you might actually start to see U.S. large cap equities really selling off, and the place to look in the wake of that would be emerging markets. Another thing that came up was liquid alts and how they might start really fitting into ETF wrappers. So that was another big conversation, how you might look for hedge fund type returns or PE type returns, how they might fit into ETFs.
Right, especially if you have 60-40 and you go into bonds and bonds are selling off with equities, that's not really much protection for you. So it's interesting that they've come up with these alternatives. Eric, another big theme was the invasion of the ants, the active non-transparents. No surprise there, especially with a bunch of actively managed non-transparent ETFs coming to market pretty soon.
Yeah, I mean, 5 years ago it was smart beta. 3 years ago it was all crypto. This year it's the ants, right? And it seems like there's two sides. If you're inside the ETF terror dome, as I call it now, you're very bearish. You're just like, look, guys, you're not going to have a lot of luck here. It's brutal. And this report shows it from Cerulli that the ETF issuers themselves don't see a lot of optimism here. However, if you talk to the ant issuers and the people who make the structures, boy, are they bullish. They think this is going to be a big deal. So, Claire, what did you find in terms of listening to people debate this issue at the conference?
Yeah, I think you're exactly right. This was the biggest topic at the conference. Everyone agreed that this is the next big thing in 2020. The question is, what's going to happen when these funds actually launch? Some are saying that they're going to gather assets. Others are more skeptical. Rarely do you see investors demanding less transparency in what they're holding. So I think, we're having these great talks about it. The question is going to be when they launch, then what happens?
It always comes down to performance, right? Annie, climate change was topic number one at Davos earlier this month, so it's fitting that ESG was front and center at the industry conference. 2019, we know, was a big year for flows into ESG. I guess the question here is, will the assets continue to follow the hype? Because the hype has only gotten bigger.
That's right. You saw ESG assets and ETFs hit records last year. And the question is whether you can really carry that forward. There is a lot of attention being paid to ESG funds, issuers coming to market with new funds and really racing to get new funds on the market. So that was in focus. There was another focus on how you might apply ESG to fixed income, whether it matters there. And also just how to define ESG. I think there's a lot of questions still that investors and asset managers have around what makes sense as ESG. Should it be an exclusionary screen or something else?
Is ESG a factor, Eric?
That's a big question. If it can get alpha, I think people would add a little on. the bigger question, if it's not that and it's to clean up your portfolio, one of the ETFs that was really highlighted was SUSL. I think it's the largest one. Doesn't own Apple, Facebook, Amazon, Netflix. To me, this is like a car without an engine. So I wonder if people are going to replace their whole portfolio. Do they really understand they aren't getting those kind of engine type stocks?
Unless the world is changing, and Annie, we were talking about this earlier, maybe you shouldn't be looking at a car with an engine, you should be looking at an electric vehicle. Different world.
Well said.
All right, Claire, this was your first year attending the ETF conference. Eric likes to call it the Comic-Con of ETFs. What did you think? What was your impression?
Well, I gotta say, no offense, Eric, I think ETF people are way more fun than I thought initially.
Thank you.
It was great to meet people. It was awesome location. You know, there were cocktails. One issuer was promoting their fund with space-themed ice cream because it was a space ETF. So I think it's the closest thing to spring break you'll get outside of college.
Well, it was in Florida in January, so that certainly helps. Annie, there's always a celebrity or two attending this conference as well.
Yes, so I moderated a panel, and right after my panel, Derek Jeter was waiting backstage to go on. So I got to shake his hand, and I was like, I'm Annie, and he was like, I'm Derek. So that was
And you said,
pretty
I
cool.
know.
I was like, I certainly know. But I was wondering why so many people were there for a panel on ETF liquidity risks, so I think it might have been that they were waiting for him.
No, it's all about liquidity risk. Eric, you're a veteran of these events. What was your impression this time around?
It was good. This thing continues to get bigger and bigger companies involved. To me, that was the big thing. Also, a little more people wearing jeans. So I like that trend. I hope we can all just sort of go casual in the future. So there's this interesting mix of ties, suits, and then total like techie jean type characters.
Well, par for the course for disruptors, right?